Ladies and gentlemen, Joshua Salvetti. Today I need to break down a topic, flesh it out, right? Something that is killing, crushing traders, right? It is holding them back. It is in the way between them and their dreams, right? And it's called overtrading, right? So today we're going to talk about where overtrading comes from, why we overtrade, what stems from overtrading, right? Why we make these decisions that lead to horrible habits, and what are the results of these habits, and then most importantly, what the results could be if we could just stop overtrading, right? See, overtrading comes from wanting to be right? And then this is where we need to ask ourselves, why is it we're trading today, right? So before we go any further, guys, today we're going to dive into a really important topic, right? But if you want to get involved with the High Performance Trader team, click the links below, right? If you're trying to level up your life and bring it there, if you're trying to attack some demons that are keeping you from consistency, bring it there. Get involved. Click the links, right? We got a phenomenal mentorship program, right? Breaking down trader bootcamp, market concepts, everything that you need to know about the market to get in and out of the market with consistency. But most importantly, guys, I'm not just going to show you my trades, right? I'm going to teach you how to fish. I'm going to teach you how to restructure your life, restructure your trading day so that you can start to see those consistent results, right? Guys, until we change, nothing's going to change for us, right? So if you want to get involved, click the links below, message me, we'll get you involved, level up with a phenomenal team, right, that crushes it every single day. Okay, so today I want to talk about overtrading, right? So overtrading is definitely in the way of you and your dreams, right? Because every time you overtrade, right, you're not trading properly. See, trading is a mental battlefield. Every trader out there knows this game is not just go long and go short. It is a battle between yourself, right? Self-doubt, self-control, indecision, decisiveness, right? Control, irrational and rational decisions, right? We start to act certain ways that lead to certain habits. Now, based on these habits, right, that are based off our core beliefs, we start to see consistent results or inconsistent results, right? So it's very, very important for you to get your mind right to become a consistently profitable trader, right? This is one of the hardest things you're ever going to do, guys, right? You're going to have to attack the demons, right, of irrationalness, indecisiveness, fear, doubt, right? All that bullshit that's in the way of you and your dreams, right? You're going to have to learn to attack that, right? And you guys know how I attack it. I go very, very hard on personal development, right? I go very hard on positivity, right? I need to increase my frequency, my energy each and every single day, right? So I don't view the market in a negative way, right? Because if I view it in a negative way, I'm going to get negative results, right? See, our perception of the market, right, will either put us in harmony, in tune with the market, or it will keep us completely incoherent, right? Not aligned, making horrible decisions. And one of those decisions is overtrading, right? So today we're going to talk about overtrading, why we overtrade, what we're actually trying to do when we overtrade, and most importantly, how to get past overtrading, right? So guys, I hope you like this content. Make sure you hit a like, subscribe for more content, level up with the team, right? So where does overtrading come from, right? So for me to break this down, I got to break it down in my journey through my experience, because that's all I know. I can only speak on what I've been through, right? So when I first started trading, right, it was in a bull market, right? It was like 2018. It was ripping. Market was going up each and every single day. Look, I'll show you. Let me whip out the daily. Let's do the 15-year month chart. Okay. So when I first started trading, right, you can see the market was rallying, right? It was a bull market. And I had a very simple strategy, right? But I had no fear, right? I would buy above pre-market high. That was my strategy. And I found consistency for one reason. I cut my losers extremely fast, and I would let my winners run, right? So when I first started trading, though, and I think every trader goes through this, is you haven't developed that fear yet. You haven't developed that indecision. You haven't been burnt yet. So the result, you only view the market in a positive outlook, right? You don't view it with fear or indecision, right? You don't view it from, oh, it's burnt me in the past, so I have to watch out for this. And then you start second guessing and all that bullshit that keeps us away from our dream, right? So as you grow as a trader, right? Maybe your first year was all right, or maybe you got smoked, doesn't matter. But once you get smoked and once you start experiencing inconsistency, right, and you figure out about the market psychology aspect, right, of trading, and then you're like, whoa, it's a battle against myself, right? How can I start to see consistent results, right? And then you really start to second guess everything, right? And now what comes from that, what comes from second guessing is fear, right? Anxiety. And then we literally only can approach the market in this sort of fashion. We do it long enough, right? I've met traders, me especially. I traded with fear and anxiety for so long, I literally conditioned myself to trade that way, right? I understood I was going to be fearful every day and I just accepted it. And after we do it for so long, guys, it becomes a part of us. So for us to get past this, we must restructure our way of thinking. We must restructure our way of living, our approach. And until we do, we won't get past it. And why it's so bad, right, is because the results that come from anxiety, from fear, from indecision, from overtrading, right, the results that come from that are not the results we need to become the best men and women for our family. They're not the results we need to see consistent results, right? To become that 100K, $250,000 a year day trader or even more. We cannot be trading out of fear and anxiety, guys. And also, most importantly, once we go through that journey of, being wrong, then we dive super deep into analysis, right? We figure the more I can study about charts, the more I can learn about supply, demand. Maybe I'm just missing a strategy. Maybe there's this perfect strategy out there that's going to help me become an amazing trader, right? And then we're just searching, right? Diving into analysis, right? And then we try to think the better analysis we are, the more profits we see. And that's the lie, guys. Listen, that is the lie. Your analysis is not your results do not stem from your analysis, right? Your analysis may help you get in and out of the market, right? But it does not attribute to execution. And execution is what leads to long-term consistency, my friend. Because until you can execute your strategy like that, without fear, without anxiety, I don't care how good your analysis is, right? You're never going to outsmart the market, right? The only way you can become consistent in this market is by outsmarting yourself, right? By understanding that over trading is literally a byproduct of needing to be correct. Right? Every time we put on a trade and it's a loser, right? We go, oh man, I don't like this feeling right now. I don't feel good about myself, right? I've put in all this work to become such a good day trader and I just had a losing trade. This isn't right. I need to put on another trade and another one and another one. And next thing you know, you just blew out half your account because you couldn't accept that you were wrong. And the only reason you were wrong is because your criteria for being wrong is based on P&L. Listen, guys, how could you associate your worth with your P&L when we can't even control if price goes up or down, right? So you're literally associating your worth with something you can't control, and you think you're gonna get consistency? Are you out of your mind? Listen, guys, we need to approach the market in such a structured fashion, right? Meaning, I have criteria for myself that I grade myself on that is not based on P&L, right? Let's run through them. Game changer. Once I did this, it just really opened my eyes to the fact that I can't control price action. What can I control? All right, so this is uploaded in the Discord for anybody, right? This is sort of stuff we're doing over here. Trade performance. Right? So this is how, right here, I grade myself each and every single day. Because once again, guys, we cannot control price action. We can't control if price goes up or down. And the reason why this is so important, hear me out. Please hear me out. The reason why this is so important is because until you can de-link your self-worth to your P&L, you will constantly try to be right. You will constantly overtrade. You will constantly be trying to get that feeling in your heart of, ooh, I did well today because I made some money. Listen, your ability to make 100, I don't care how much money it is today, has no effect in the grand scheme of things of the person you're trying to become, right? Your money that you made today, your little couple $100 that makes you feel good about yourself, has no correlation with who you're going to be in a year or 2 years. And on the flip side, the amount of money you lose today has no link to the $1 million trader you're going to be one day. So we cannot define ourselves or our worth on our P&L. Otherwise, we will not grow because we can't control if price goes up or down. We can only control these 9 things. Right? We're going to break into them. Number 1, did I trade with market conditions? So everybody that's taken my course, part of my Discords, know how I identify and adapt to market conditions and how that is a rule, that's something we can control. Right? So this is something we must grade ourselves on. Did I trade with trend? Was I in tune with the market? Did I understand who was controlling open print? Did I understand who was controlling previous day low, end of day, previous day high, supply, whatever it is for that day? Did I have direct harmony with the market and trade with it? Number 2, did I predetermine my risk? Meaning, did I identify an area where I need to stomp out, right? If this trade goes against me, if structure breaks, if structure holds, whatever your trade plan is, you must identify an area where it is proven wrong, and that's where you get out of the trade. Number 3, did you hold a 30% hard stop? Listen, guys, take notes. This is the most important part. Like I was telling you in the beginning of my trading, right? I had a super simple, really not that effective strategy, right? I just bought above pre-market high, right? But the reason why I did good and made consistent money is because I never lost more than 30% on a loser, right? So, guys, once again, this is a long-term probabilistic game. Based on probabilities, based on averages, right? It is not let's make money today. It is over the next 100 trades, I make money. So stop associating, once again, your self-worth with the trade you took that just was a loser. As long as I lose less than 30%, that is a win in my book. Number 4, I identified large money controlling the critical level via chart pattern, right? This is very important. Just because price comes to a level of interest, whether it's end of day, pre-market high, pre-market low, supply, demand, right? Without any of our what we call areas of value, just because price comes to that area of value doesn't mean we enter. We need a chart pattern, meaning a bull flag, bear flag, double bottom, double top. My favorite, the break and retest, right? Super important because, guys, the chart pattern represents human behavior. It represents bank behavior. Going back to we can't move price action, the banks do. So it's our job not to predict the market, but to react to what the banks are doing. This is critical. It's the only way to trade. You must understand what the banks are doing via chart pattern and then put on a low risk, high reward, high probability, high quality setup. Okay, traded off an area of value, right? Number 5, once again, critical. We don't take trades in between imbalances, right? We don't take trades just off random intraday levels. No, we take trades off critical levels that hold volume, that hold liquidity, that this is where the large money is going to show their decision. This is where they paint their picture. Today is a bullish day because buyers defended open print with volume, with break and retest. Let's go. Target pre-market high, right? This is how we get in and out of the market. 6, acted without hesitation or reservation. This one is critical. I spent years being an indecisive little bitch, right? I spent years not pulling the trigger on my trades. I spent years watching them happen. All to wait 5-10 minutes later after the move happened, finally entered, right? Waiting for confirmation, right? Waiting for confluence between the market, right? That crushed me, killed me. Once again, guys, my experience. That's all I'm talking about, right? So don't wait for the whole move to happen. If you see something, have the balls to act. Put the trade on. Put your stop in. Stop being worried about it. Stop over-guessing. Once again, you don't need to be right today. You only need to follow your rules. 7, traded with regular position size. We did not over leverage, guys. A lot of traders say a lot of different shit. Once again, based on my experience. Once you add extra size, once you double down, the outcome of this trade becomes so significant. How could you even for a second think you could remain objective when you have extra money on the line? You must treat every single trade equal because once again, no trade has has a higher chance of working in your favor. As long as you can properly define your edge, you should not be finding any trades with extra significance. I don't care how much you like your setup. Listen, you can be proven wrong. Once you put extra money on the trade, that is when you lose, because now your perception is completely screwing up the market's information. You're looking at the market's information with way too much significance, right? You're looking at it, every red candle is literally making your heart pound when you have extra money on the line, guys. We cannot make those decisions. We must approach every single trade with the exact same amount of money, not only to keep us from having that horrible perception of market information, right? Keeping us out of sync with the market, right? But this is a law of averages, probabilities game. So if I have a win ratio of, let's just say, I don't know, 50%, but my winners have lower size than my losers, I'm not going to be consistent. Or if your losers have higher size than your winners, you're not going to be consistent, right? You must view this game. Every trade, exact same, right? Exact amount of money on the line. You only lose X amount every single time, and you only win X amount every single time. Prove that your system is consistent, right? And this just highlights and really amplifies every other part of this system, right? Is if your system, meaning your edge, your strategy, your execution is proper, that's where consistency comes from. If you're not consistent right now, you must look at your system and figure out where it is you're fucking up. Where is it you're putting too much significance? Where is it you're not adhering to your rules? Where is it you're not stomping out? Where is it you're taking profits too quickly? Where is it your pre-market's wrong, right? Your system is what leads to consistency, not your brain, not your ability to be right, not your ability to analyze the market. It's your system. So dive into your system, figure out where it is you're going wrong, and fix it. Number 8, took profits based on structure. Listen, guys, structure is everything, right? Now, whether or not you're in a trade that's going in your favor or it's not, you must identify an area where you go, okay, conditions are shifting. Conditions have changed. This is what we call structure, right? So structure is literally break and retest, break and retest, break and retest, right? Let's go back to Friday real quick. Open print, right? We rip off the market. We're starting to form structure. We break above end of day. Buyers defend end of day. We rally, right? This is structure. Once structure breaks, right? And there's a couple different ways to see this, but once we stop making that higher low here, we cut profits. We book profits. We're done. We're out. The market has told us something different, right? And until, see how I get that, guys? It's right off the top of this candle, right? Market's ripping, forming structure. Boom. Holding end of day, ripping, forming structure, holding the highs. Break and retest, break and retest, break and retest. Once that breaks, we're out of the trade, right? Structure is now broken. Now, also, if you hit your target, you can get out of the trade, right? As long as you're approaching this in a systematic fashion, right? Knowing that, hey, I can't control what happens next, but based on what's in front of me, I'm going to make X decision, then you are doing what's right. This is your system. And remember, it's not what you do, it's what you're thinking while you do it, right? Mark Douglas. Now, last one. Traded based off your pre-market plan, right? So I've talked about this before, guys. Your pre-market plan is so important because what you view in the market before you have money on the line, before the anxiety settles in, before the worry and the fear and all what comes with the 930 bell settles in, right? Everything you've conditioned yourself to do, before all that happens, you're viewing the market in a proper fashion. You're super objective. You're non-biased. Your cognitive congruency is on point. You're able to understand where the market's at and what critical point, right? Meaning, if buyers defend this, I'm bullish. If sellers defend this, I'm bearish. This is how we make the best decisions, right? So when we make a pre-market plan, we must adhere to it. When 930 bell goes off, don't just throw your pre-market plan out the window. I don't care if you're printing it out and putting it right next to your computer. You must keep your eye on your pre-market plan, right? This is critical, right? And not only that, guys, it's a form of discipline. It means, hey, I respect my analysis. I respect my view of the market, right? And not only do I respect it, I adhere to it, right? So guys, these are the 9 things that if you can start to do and start to base yourself on, you're gonna stop focusing so much on being correct, right? And remember, being correct leads to horrible trading errors, right? Leads to horrible decisions on the market, right? Guys, listen, I've been through this. I've been through this for years. I still struggle with it. It's not, it's a journey. We're never going to be completely over it. But guys, listen, if you want to change, you must change. Nothing's going to change for you until you change. So if you're looking at your results and you're unhappy, you don't like your equity curve, it's time to make decisions. Don't lose it all like I did. Don't wait too long like I did, right? Don't wait 3-4 years like I did, trying to outsmart the market, trying to beat myself, trying to be correct. Guys, it's got to change, right? And think about it, guys. Law of averages. We don't need to be right on every single trade. Our need to be right is costing us our dreams, right? So guys, hit a like, subscribe for more content, get involved in the Discord. I'm Joshua Salvetti, and I will see you in the next lesson.